Good afternoon. Today we will go through the topic of CVCs, and specifically we notice there is quite a pretty important and recent trend that is the one of corporates that are more and more spin-offing their venture capital unit. Some very recent example is the case of Orange that spun out their Orange Ventures. And in the past, we have a situation like Siemens with Next 47, Santander with Moro Capital, BBVA with Propel Ventures. So all examples of corporates that are more and more spinning out their capital venture capital unit, while in also certain situations also removing the direct association with the parent company. And that's why today I'm happy to have the opportunity to deep dive into one of these cases. And particularly, I will have as my guest Jan Lozek, that is the managing partner of E.ON Future Energy Ventures. Hi, Jan.
Hi, Alberto. Nice to being here.
Yes, again, meet you. I don't know, it's always complicated to say in these times, but still, it's a pleasure to have you with us, let's say it this way, despite digitally. So Jan, big topics here. Then I want to also to get your perspective, and during our conversation, we'll definitely deep dive into the E.ON decision that has been quite recent. It was October last year, if I can remember. And so it's quite timely to have a proper understanding from first-hand understanding of what are being the reason behind E.ON decision and what are the future strategy in play. But before that, I think would be beneficial to get for our audience a bit background in terms of E.ON, also particularly after your not recent but largest acquisition of Innogy, and also getting a bit of your background.
Yeah, happy to start. First of all, thanks for having me again, Alberto. My name is Jan Lozek. I'm the managing partner of Future Energy Ventures, which is a global venture capital firm, the venture capital platform of E.ON. E.ON is one of the largest utilities in Europe with 50 million clients, 75,000 people, and an immense market capital valuation. E.ON mainly focuses on distributing energy and gas and other energies to clients and serving clients with any kind of energy or energy plus products. So on top of energy sales, maybe of rooftop solar panel and so on and so forth. E.ON has acquired Innogy recently. Innogy was sold by RWE to E.ON, and with that sale, E.ON also divested its entire renewable power fleet to RWE. And the deal was closed by the end of last year, in the early end of last year. And on the 1st of October, E.ON decided or launched Future Energy Ventures, its venture capital platform. Future Energy Ventures was built on what has created in Innogy and E.ON in the past. Both venture capital teams were put together into one company, which is called Future Energy Ventures. The team consists of 15 people with E.ON background and Innogy background. Future Energy Ventures consists already of 215 million of invested capital, which translate into 59 portfolio companies in North America, Europe, and Israel. And some fund investments and token investments from the past. The team is located in Palo Alto, Tel Aviv, and mainly in Europe, in Berlin and in Essen. And we are mainly looking for investing into future technologies in the energy industry, mainly software, asset light, not hardware, not related to the former times of clean tech, and happy to have a chat about that as well. We are mainly focusing on software because what we see, the hardware and all the tools for creating a sustainable future energy system is already there. All utilities and many investors investing into renewable technologies and supporting the immense growth of that asset class in the entire world. What is now needed, it's more to provide the software and the technologies to connect everything to a somehow consistent and coherent energy system, so that we can incorporate small householders with a rooftop photovoltaic plant and large utilities together, and that we can run a manifold energy system in future. So we are focusing on technologies, for example, which helps to manage flexibilities, to virtually create power plants, to virtually create storage, or to virtually steer and manage energy systems from different owners and from different locations. That's our main focus. What we also see in our industry is that energy infrastructure is quite converging with building and city infrastructure. So we're also investing into digital solutions, softwares, which helps building to onboard into the energy ecosystem, so to say. We invest into PropTech solutions, energy management solutions, which helps building to be a contributor and a partner in the energy world in future. This also is true for mobility. If you think about electrical vehicles, they have a battery, they need energy, they can provide energy, and we're also investing into technologies which helps to serve clients with a good software for using and maintaining their cars, but also which helps to connect their cars to the energy system to make cars able participate in the management of demand and supply in our energy systems. And to make all this happen, we're also looking into somehow into kind of deep technologies, enabling technologies, which helps us to create this future energy system, how we see it today in E.ON and in Future Energy Ventures.
Very, very good. Just to stay being focused on your areas of investment, first immediate question, maybe useful also for the audience, which is the typical stage you invest in?
Yeah, thanks for that question. We are investing usually and starting to invest usually in the Series A or B, and then staying in for a little bit longer. So usually ticket sizes are between 1 and 5 million in the Series A and 5 and 10 million in Series B. Why we are doing it? Because our sweet spot is to connect then our investments with our partners and with E.ON as such, for helping then startup technologies to onboard into the E.ON ecosystem, selling their technologies to our customers or using our technologies for creating new products. And usually you can only do that if the startup has a certain development of their technology, their team, and their business.
I think this is pretty common. Like most of the CVC are not investing into early stage stuff because, again, it's too early to be exploited or deployed. Just to another quick technical question: are you typically leading the investment, or you just participate in investments led by others?
Yeah, so in Europe often we lead, in North America we often follow, but there isn't any rule. I think for us it's important to get the possibility to help with the business development of the company, to have a board seat or a board observer seat, and to have the possibility to influence somehow the business. Not talking about our shareholder position, more talking about our business developer position in the company. So being involved, having a connection to the team, and so on and so forth. This also means to us that we have a decent shareholding in the company when we start to invest into it.
How do you define a decent shareholding? I think that's maybe useful.
Yeah, it's a good question. So if I would write a book about venture capitalism and corporate venturing, I would say 5 to 10%. But we all know reality sometimes it's a little bit more difficult. It's not about we have capital and we organize the market. We provide capital, and we need to also being able to get into and around, isn't it? So hence, I think that the general target 5 to 10%, but sometimes we start with 2 or 3 if this is the only possibility to join a great venture. Yes,
and depend also what are the preferences associated to the shares that probably will allow you to have a future role. That's probably the most important thing. You define, actually, E.ON Future Energy Ventures is defined more than as a CVC, as a venture capital platform. And I was quite curious to understand why do you stress in the communication this topic, and how does it work?
Yeah, very good question, and happy also to get a little bit your opinion about it. But what we believe, our task is not only venture capital investing, and calling ourselves a fund would really narrow what we are doing and what we are up for. So we believe the task we have to create a sustainable future energy system means much more. It means collaboration. It means working with others together. So it means to work with other investors, other large or corporations or organizations, working with the startups. And to make that really clear from the very beginning, we applied the word venture platform, and we think it makes it more open, and it creates even the question you asked to me, what does it really mean? And that's helpful for us to explain what we are doing and what we're up for.
Okay. No, again, because this was, I noticed in the original press release and also on the website, is pretty stressed out. And I wanted to get, because maybe almost everything, and I think it's good to get what you're meaning. I think it's what I got, but I wanted to make it very super clear. So let's go back to October 2020. That has been the decision of launching this new fund is a mix between spinning out the existing funds, merging the existing funds, creating a new vehicle. And so as mentioned in my introduction, we are seeing more and more of this example of corporates that are in a certain way are moving out the corporate venture capital activities. Doesn't mean that they get rid of them, but substantially give them a sort of a larger and more autonomous role. We consider them a sort of separate entities, still obviously with some connection with the mothership, but separate. And also sometimes the naming of these new CVC funds is also intended to reduce the association with the parent companies. And so I wanted to understand for you what has been the vision behind E.ON Future Energy Ventures, if it's something that might be in a certain way categorized as the other example that I just mentioned, or is it different reasons? What's your take here?
Yeah, that's a good question. I mean, our discussion or the discussion in the boardrooms about Future Energy Ventures and what we wanted to do was manifold, and there's so many perspectives. But I think in general, there are two perspectives. One perspective is a little bit, what do we want to achieve and what's our task? And our task is to invest in the most promising and best startups relevant for the energy industry to create something new. And if you wanted to achieve that, you need to attract and you need to get into a relationship with the best startups in this world. That's one thing. And the other thing is you need to provide something to them that they are willing to work with you. And if you think it's true, being just one company which is great in Europe but not great in North America, not in Asia or other continents, that's little to provide, not much enough to provide for startups to create a good relationship and a scaling perspective from a partner perspective as a venture capital firm. So we are always we're thinking in the past, wouldn't it be a great idea to have much more partners on our platform which can help to grow and scale startups and futures, which creates and solves problems for us in the energy industry, but which also then helps startups to scale and to get access to much more clients than just 50 million and much more markets than just Europe. And I think that's strategic rationale. If you wanted to achieve what we wanted to achieve and wanted to have impact, you need to have a platform where you have more partners and more contributors with regard to capital and partnership with regard to helping to develop the business of the startups. That's one. Yeah, sorry.
No, I think you mentioned partners, and so obviously my immediate reaction has been limited partners, and so is one of the goal of Future Energy Venture also to open the the capital to other LPs different from E.ON and Innogy. This is part of the strategy to launching a new fund that is a certain way more autonomous, so at a certain point can be also open to capital contribution from outside the parent company. Question number one. And question number two is regarding the partners. You mentioned the partner, you mentioned the concept of platform. Can you make some example of what you refer with them?
Yeah, absolutely. And then happy to go to the second part of the coin a little bit later. The question with regard what's the forward strategy is, so with launching Future Energy Ventures, we clearly had in mind to keep open the option to onboard further investors, strategic and financial investors into Future Energy Ventures. We keep the option open, but we did not decide yet to do so. That's it's also quite clear, and that is that are the topics we will discuss in our organization, and then communicate as soon as we have it. We have a way forward.
Obviously, yes, but it's an option on the table. I remember
Absolutely.
Orange in spin-offing Orange Ventures. One of the reasons that has been mentioned has been they might be looking for external LPs, and so that's is becoming one of the reasons also for this repositioning. Robert Bosch Venture Capital, a new fund in China, they are for the first time open to external LPs. So
Absolutely.
I don't know if it's a trend, but it's something that is we are getting some signals to get going in the same direction.
Personally, I think that makes a lot of sense also from the perspective of from the hygienic perspective, financial investments, and how large corporates usually influence their 100% subsidiary companies, and how you set up a platform which creates a little bit a level playing field for investors, but also for startups to interact with each other. But coming back to partners, but for us, it's not only about investors, it's also about large corporations. I'm not sure if you or anyone of the participants here know our initiative Free Electrons, for example.
Yes, the one that is led by EDP together with other utilities across the globe.
Yeah, absolutely. We are 10 utilities from all continents on the globe, and we are inviting energy-focused startups each year for an accelerator program together, and where we focus on partnerships and working together with the startups and understanding their technologies, understanding their products, and helping them with products in our businesses to scale and to grow and to learn. And sometimes, and in the best startups, you usually do then invest as EDP and any other investors there. And what we have learned from that exercise we are now doing since the last 5 years is that's not only about investing, it's also about providing a platform and helping each other to understand technology opportunities and possibilities, and also helping startups to understand how energy business really works. Hence, we are looking for partners on our platform. For partners we have in Free Electrons, but for many more other companies with other techniques and technologies, or any other needs. It's not only about the energy industry, it's then also about adjacent industries. If you think back to our focus, and I talked about city infrastructure and how is it converging with energy infrastructure, then you would also discuss such topics with construction companies, with companies which run city infrastructure. So we are looking for partners to develop business, and we are looking for investors to invest into our organization, to create a bigger platform, to be able to invest more and to create more impact in future.
Going back to the problem of the name of the entity, again, this is a big debate actually, because some people argue that the real value of CVC is the association with the parent company. Yes, you are labeled as strategic, with all the consequences it might have bringing on board a strategic player, but on the other hand, you're supposed to bring first and fast entry to the parent company business. So it's a big deployment opportunity. On the other hand, some other people argue that the CVC are perceived as too much. linked to the parent company, too much strategic, and so sometimes the best startups try to avoid them. What's your perspective here?
I think that's the question of corporate venture capital as such, isn't it? My personal take on that, you need to focus on the right points. I think if you wanted to do corporate venture capital, you shouldn't only think about your own company with regard to partners and whom could help to scale your business. You need structures which are market common. So you need structures which are attractive for your partners, co-investors, and startups that you wanted to invest into. However, if you can't provide the strategic benefit to connect the startup and provide business for them, you won't achieve your target as well. So I think we really need to work hard in our industry on having the right structures to invest into the companies and the right governance on top of us. And that may develop more in direction of fund organizations as it is today, but with a clear strategic proposal, which is proven that we can also and are able to connect startups to the business, because that's also art. You all may know it's not like investing in a startup and then I'm connecting it to my business. There's a lot of work, a lot of people to meet. We have 75,000 people in E.ON, and finding the right person to help a startup to grow, that's not an easy task. And I think what's the topic, my personal takeaway on that is we should rather not focus on the financing structures, and I would recommend there going back to what the industry already has developed in the past decades, and would rather look into such structures like fund structures, which are quite common to help to find a common sense and also onboard further partners easily, and should focus much more on how to connect and create impact in our own organizations for our LPs, but also for the startups.
There are some CVCs, notable example are Shell Ventures, Robert Bosch Venture Capital, Suez Capital, that have introduced a dedicated team. Different names are called implementation manager at Shell. They are called partnership directors at Suez Capital. Robert Bosch Venture Capital as a unit is called Open Bosch, just with the goal of exactly creating connection between portfolio companies and the business unit of the parent company. Do you have something similarly structured? Do you plan to have it, or do you manage this the bridge between the portfolio company and the parent company business unit?
Yeah, we have something structured similar that's not sitting in our organization. So our organization is 15 people with nearly 60 portfolio companies, but we have an entire innovation organization in E.ON. Innovation is organized together with strategy in E.ON, and the innovation team and the strategy and innovation team of E.ON is connecting startups from our portfolio to the business. We are constantly working together, collaborating, and working then together with these teams from the innovation team to connect our startups to the business using the same infrastructure, systems, and tools on one hand. And then we have teams which are focusing more on in-house innovation needs, which then reaches out to us, and we provide them a sourcing platform for getting access to the right startups and technologies beside just a pure investment case.
And that's a good point, because one of the value, I remember one of my prior conversation with Robert Bosch Venture Capital, Ingo Ramesol, and Ingo was quite adamant to say that the value is beyond the portfolio company, because again, some companies are interesting from an investing perspective, while others are interesting not from an investment perspective, might be equally interesting for the parent company. So that is the point that you just made. Yeah. You need also sometimes you facilitate connection also if the company is not a good fit for an investment for multiple reasons. And that comes to my next question, that is the $1 billion question they typically ask. That is, as a CVC, what is the most relevant goals, the strategic goal and the financial goal? What is your mandate?
Yeah, the most important objective is the strategic goal to generate the future energy system by far. However, one restriction to achieve that is achieving top-notch financial returns. Imagine you wanted to scale a startup and you don't find investors, co-investors to scale it. I think that says anything to everything to my statement. If you are not looking for financial returns, you won't invest into the best startups, and it will be difficult for you to scale all the technologies you are interested into to a certain level where you can either acquire it or sell it into the market. So hence, our task is strategic, but we need to look into the financial case, and without exciting returns, it does not make sense to invest.
Yeah, again, it's the typical tricky question, because it's like you're asking, do you love more dad or mom? I think it's difficult. I think you need them both, but it's interesting to see the way typically people like you start answering the question, because you started from one and then you get to the other, but it's quite indicative to see the path that you started with. And talking about strategic, one typical KPI that we track to see how much is the strategic goal relevant for a specific CVC is the number of portfolio and company has been acquired by the parent company. Mm-hmm. Do you have any data that you can share in terms of your portfolio, your cumulative portfolio in your, again, despite of two different stories that has been combined and merged, do you have some data that you can share?
We have a couple of investments we have sold or acquired, which have been acquired by our colleagues from the core business, but I can't share the details here.
A couple out of, you say that you remember 59 portfolio companies, something like that. So just a minority currently.
Minority, absolutely.
Yes. Okay, very, very, very good. So going back to future directions in terms of, again, the world that we are living at first, and then the world that we are at to. First of all, talking about the pandemic, COVID-19 impact, how this has impacted on your, let's say, investing behaviors and your investing approach, has been slowed down the deals, has prevented you to sign new deals. Can you tell us a bit in terms of how the COVID is generally impacting, based on your perspective, the venture capital community and also the startup financing?
Yeah, very, very good question. I'm just reflecting a bit and about what happened in the last past months, because it was an amazing and quite rapid journey. And I feel like in the nowadays, with being in video conferences all the days, I lack a little bit the reflections and being a little bit mindful what happened and acknowledge the good and the bad one, isn't it? But in general, I think COVID for our portfolio was bottom line was a positive event with regard to financial traction, to strategic traction of our portfolio. We have seen a lot of nice and good developments, more demand on the side for our startups with regard to technology sourcing. We see much more support for the entire topic. Energy as such, so many nations, so many companies have raised the targets with regards to sustainability. As such, with regards to funding, which is provided now from the European Union, other nations and other investors. With regard to the entire investment industry, future energy topics are now in any investor report. There's so many inbound interest in us and all other funds which do similar things than us, like ETF, like energy impact partners, like Shell Ventures, and so on and so forth. And please apologize that I did not name all. I think in general for our industry, it was a great year and an amazing year, and we achieved a lot. There was a lot of activity. There was not only good, also bad and ugly, that some companies couldn't do it and make it, and we tried to help and need to hold the boundaries in the very end, the boundaries of our industry. But in general, I think it's very good here and very exciting also with the trends. If you look at trends like remote operating infrastructure, that's now a mainstream topic, isn't it?
Yeah.
When we were talking about this 3 years ago, Alberto, everyone was saying, what? With drones inspecting my grids, how should it work? I don't understand, and whatever. So we see a lot of supporting trends. We see a lot of interest, more capital in the market, a lot of deals. So it was definitely with regard to our industry, something which helped us to grow and to scale.
But have you seen a trend of mostly continuing to investing in portfolio company, meaning follow-up investment in portfolio company rather than making new investments? Because again, making a new investments without I've never met in person the founders. Again, if I have say something probably 1 year ago, you should say, no, this is not possible. I believe today is becoming something that is happening, but how fast is this happening? There are still some barriers. What is your take here?
Yeah, my take here is it's happening. Investors are, I mean, you know how we are. Yeah, we are rational. We are fact based. We are looking what's happening, what we can do, and we wanted to do our business. So when we start to invest, we as an organization, we are not representative in the way that we were focused on finishing the merger, putting everything together, and restructuring our organization and launching then Future Energy Ventures. And we did few new and most follow-on investments, but follow-on investments with new investors, and that's mostly the case. And that means there are investments happening. And I see that also, or get it also from talks with my investor fellows, or even with investors which are in other asset class active. There's a lot of investment activity. The first 2 or 3 months were a little bit, everyone was looking what's happening and can we do it? But now, I mean, we do it via Zoom. Yeah, I had 2 months ago, I had my first virtual notary meeting, where we were, it was an exit of us, where we sold something to some new investors.
Yes, I think is the new way of doing things, and but I agree with you. It's probably has been a period of time when everybody was trying to understand: are we just pausing our life, or we are moving into something different? And in the end, we move into something different. And I think also something that probably 1 year ago was totally unacceptable to invest into someone without having physically and shaking and face-to-face interaction. I think today, is the new norm. It is totally possible. At the end, you are investing, and the due diligence can be done also remotely. And so that's a good point. Finally, to complete our conversation, how do you see the world of corporate venturing in general, and specifically the area of CVC? What if you should name 2-3 main trends that might happen in the next, I will not go more than 2 years from now, but what's some of the big trends that you see happening in the world of corporate venturing and CVCs?
Yeah. We touched it already earlier in our conversation. One big trend, I think, is having an structural setup which is comparable to the market, also in CVC organizations, which also allows then CVC organizations to properly manage their positions with regard to risk management, means onboarding other investors, or with regard to getting more reach to startups, meaning also other investors. That's definitely in trend. You have already mentioned it in the beginning, Alberto, and I'm seeing the same, and that's also the same discussion I see with our board or getting the feedback from other organizations like ours. The other topic is we as organizations need to be much more focused on creating real impact with regard to talking about euros or dollars or whatever currency you are in. That means our organizations, the impact we create for E.ON or any other partner, need to be really hard-winded. It's I think in the past it was much more about potential projects, how it could go. But today the discussion is really tough. It's about money. Show me the money. That's the question of my colleagues in E.ON. That's also our questions to ourselves. So we need to be more reliant, more binding with regard in the direction to our startups, but also in direction to our business to create really measurable benefits for both sides. It's not only about talking, it's about delivering in our industry. And if we can't deliver, and if we don't provide the structures, we will have a problem as an organization itself, as an organization itself, because there's so many opportunities to invest your money, and also larger organizations get defocused if they don't get what they ask for, and that's strategic value from their corporate venture organization, as you mentioned before. So I think these two topics are the most relevant one. We need to prove the delivery of strategic value to our LPs, and we need to operate in structures which are comparable to market structure to provide a platform where you can leverage for your investors best their investments.
Yes, I think it's aligned with what we see, and again, we have a methodology where we say that corporate venturing has moved from the age of marketing, mostly saying that we are doing things, but whatever you will actually doing was not that relevant, to a sort of age of collaboration. You need to show that you are doing something independently of the actual results. And now I believe it's the age of returns, where people need to really show the value that has been delivered, and for the venture client showing positive return on the EBITDA of the company, and for the CVC showing measurable impact. And that is open, and this is probably would be my last question, is one of the discussion that we are having with many CVC is also how our CVC unit can show the value that is producing, because obviously one thing is to invest in H1, so something that is very, very close to the core business, the short term, and so it's probably also easier to show the potential impact on the P&L of the company. On the other hand, is for entities that are most investing more long term, H2, H3. And so when you're looking at the Horizon 3 investment, is something that is not supposed to create an impact in the short term, but you are nurturing the future of the company. You are reshaping the company of the future. And that comes a pretty big topic that actually we are sitting and discussing with many CVC, also to try to identify what might be the right KPIs, also to show it. How we believe that in doing so, in a certain way, you are shaping the strategies and the future strategy of your parent company, because you are one of the sensor, one of the antennas to show what's next. You are pointing the direction, and also we are helping to reshape the strategy of the parent company. And so we are in the discussion we're having with many is what could be some of the KPIs, how you can show that you're doing such an activity. It's by essence, it's very difficult to be measured and very difficult to be proven. What's your take here?
Yeah, good question. So our take is we measure what we can measure. A number of projects, contractual value we generate for our startups with our organization. We even have internal discussions about impact, getting then not internal discussions in innovation or in our organization, internal discussions with the business to understand what's their impact using the product or the technology, and we measure that and discuss that. But that's by far not the last or the very end of the discussion. I would say we measure in our organization contractual value. We look into the potential impact of using the technology then in one of our businesses. What's the on top value, the value add for E.ON? and we measure a little bit achievements like how many projects, how many connections we could generate also with other partners, and the value with other partners.
Yeah, that is the things that probably are definitely more easy to track and measure. The other is an open question. We're working and thinking, and we continue to do our job because we believe there is a lot of value delivered there, but it's very difficult to be grasped. It's very difficult also to be tracked. But that is something that, if not properly measured, might in a certain way underestimated the contribution of a CVC entity to the parent company and to the future strategy. And so that's why we should find ways to make this activity more visible, in order to also to be recognized the value that is putting on the table beyond all the work that you're currently doing. Perfect.
Yeah, perfect.
So looking forward to continue our conversation in one of our future chats and in our regular connections. And again, thank you again for the time, and looking forward to continue to see Future Energy Ventures progressing on the market.
Yeah, thank you so much, Alberto. To your team, was a pleasure to be here, and looking forward to the next conversation as always, and I'm happy to be part of one of the next conversation as well.
Thank you.
Thank you.